CPD seminar. Today's topic, why blockchain will change private equity forever. We're lucky here today to have Elliot Lacour speaking to us, co-founder of Crowdfunding.
Hi guys, so yeah, got a bit of an eclectic background that's kind of led me to here, not necessarily the stereotypical path, but got interested in fintech and blockchain probably about 5 years ago and started really trying to upskill myself around the space and learn a bit more about what it was, and that kind of led me into the area that I decided made the most sense to me, which was private equity and how that can then interact with blockchain, because it can really, not necessarily remove a lot of what's going on, but it can really bring another layer that gives better access and transparency. So kind of dive right on into the first slide. So blockchain will do to the financial system what the internet did to media. So basically, going against a little bit what I just said and change everything. So I believe that there will be changes. First off, we'll kind of get on to why the blockchain, why that works, how that's going to be the building block. So the blockchain has never been hacked in the 9 years it's been around, so it's secure. It adds this immutable record of everything that's going on, what you own, who's owned it before, who's going to own it next. And it can update itself as it goes, so you don't require clearing houses or massive, arduous spreadsheets to figure out who owns what, what's happening, what's going on. So these self-executing smart contracts have actually attracted a lot of interest from Wall Street to Walmart and kind of everyone in between. People are beginning to realise and wake up and say, okay, so this blockchain thing isn't just cryptocurrency, the Bitcoin. It can be something more. It can add a lot more value. So as I've kind of briefly touched on there, it can change the concept of asset management. So for the purpose of this talk, we're talking about private equity. But it isn't limited just to that. It can change anything that is an asset that someone owns, that someone might potentially want to sell to someone else at some point. So here I'm going to kind of just dive a little bit more into some of the stuff you'll be seeing on the news a lot at the moment, which is the ICOs. And I know that for a lot of people that's kind of a concern. There's some bad press that goes on around them, and rightly so in some cases, but it's not all bad. So as you see here, the SEC chairman is kind of going a little bit against their current stance on the ICO space, but it shows that there's kind of a change to come. So why do ICOs exist? Why did they kind of come about? Early on, they were a fantastic wealth creation vehicle for early investors. You see Bitcoin going up several thousand times, people wanting to kind of ride that wave. But there's something a little bit deeper going on behind that. There's the fact that people are investing in projects that they believe in. There's the ability to leverage the crowd in a decentralized way to back things that they want to see happen in the world. So that means that they are this fantastic source of capital, funding for people that previously might have struggled to get that project off the ground. Yes, some people might kind of be abusing this, but with the new layers of regulation which are coming in to the space, there's increased levels of KYC, so know your customer, AML, all that kind of stuff that's coming in to make sure that these ICOs are above board and will begin to look more and more like a traditional crowdfunding model. Where they do set themselves apart, though, is the liquidity of that asset class. So if you bought into an ICO, generally it will then list on an exchange somewhere within the next few days or weeks, depending on how good the team is behind it, which means that you can then sell what you've just bought if you wish to. So that actually then makes it a decorrelated asset class from the equity within the company. So that is because the coin that you're generally going to buy, and they generally are coins or tokens, they'll be, I might kind of use that interchangeably. That coin is not necessarily an equity stake in that company, so its value is not tied entirely to the financial success or well-being of that company. That means that it gathers value in a different way. It's difficult for me to say exactly what that way is because they are all different generally. But it does mean that you can exit that when you want, and it's going to have a shorter term of when it's going to kind of mature in its value, because it is not waiting on a yearly cycle for that company to say, okay, so we made X amount, our profit was this, we're now worth X, or however people want to decide those values. You can, it works kind of tangentially to that. So that kind of leads on a little bit to these virtual currencies, which have been the main source of ICOs at the moment. So you'll know kind of the big ones, Ethereum, Ripple, Bitcoin, obviously. There's many, many virtual currencies for you to be able to spend on various different things which are coming out at the moment. There's some somewhat ridiculous ones like Dogecoin or Monocoin, which are essentially meme coins, people trading something that they find funny. But those aside, it does actually mark a big change in the way that people want to interact with value and transfer value in the world. So if you have a Bitcoin, for example, you can trade that with anyone who recognises that as having value for whatever you want. It removes a layer of regulation from it, so it is scary from that point of view. Things are catching up to it. But it marks this shift about how people want to be able to interact with the world around them from a monetary point of view. There have been corrections, there have been rises and falls in this, but at the moment I believe there will be some clear winners that come out of the space and really begin to democratise somewhat the way that we transfer value away from just standard fiat currencies. There are obviously huge advantages to some of these cryptos, and maybe some disadvantages to go with them, but around the amount of value that you can transfer, how quickly you can transfer it, at what cost, all those kind of things. That's not necessarily the focus of the talk, but it's something to bear in mind. So, moving on to how I believe blockchain will specifically interact with private equity to disrupt it, and move into crowdfunding. So, crowdfunding isn't necessarily a new idea. It's actually been around a very long time. So, for example, in the 18th century, German publishers used to use crowdfunding to kind of get their books off the ground. So go around and get pre-orders, and then use that to go to factories and sell on, basically on an idea. People would buy something unproven, uncreated, and say, okay, well, I'd like to have that, so I'll pay for you to make it and then give it to me. That's grown into things that we see today, like Kickstarter, GoFundMe, Indiegogo, all that kind of stuff. There's been this huge rise of people deciding that they want ideas to come to life. So this begins to democratise some of the power that spending has in the world, and has actually really taken off, as we've seen. Traditionally, for an idea to come to life, someone would have to go to a bank or a VC or some person of high net worth and convince them that, yes, this is a great idea, you can own this much of it, and I'll be able to give you this much of a return. Being able to leverage crowdfunding means that people can buy in for a far lower stake. So they can just buy in because they think it's a good idea, and that allows the majority of people to impact the things that come about in the world around them and can begin to shape things. So that's what we've been seeing with reward-based crowdfunding, like Indiegogos, Kickstarters. But then, if we move on, we've been seeing a huge rise in equity crowdfunding. So people deciding that they actually would like to take an ownership stake in these companies, but they can still buy in at a lower stake. So they're buying in because, yes, they want a return, but they're also buying in because partly they feel it's something that they want to see come about. Equity crowdfunding in 2017, actually 2016 already, equity crowdfunding was bringing more capital value into the markets, more new capital value into the markets than venture capital funds were. So it is hugely growing. The UK is kind of actually one of the leading hubs at the moment, with companies like CISI and Crowdcube massively kind of blazing the trail. The US is a little bit behind, but it's getting there with companies like Republic. So equity crowdfunding's rise proves that people do want to have access to these asset classes they previously wouldn't, which is private equity. So they could go onto the public market and they could buy into technically proven companies and they can trade that way, but they also do want to engage with and connect with new ideas, new entrepreneurs, things which are not coming about without their help. And this is where the blockchain kind of comes back in. And it can add a layer to these crowdfunding models, which at the moment can feel a little bit difficult. So on this slide, we'll kind of talk about a little bit how the blockchain interacts with these things to add this layer to equity crowdfunding, because it does give the benefit of access to capital. It lowers barriers to entry because you can put in less and still receive. Investors as advocates, this is something that the crowd adds that a venture capitalist or an angel investor might not be able to. So if these here an angel, they'll bring the expertise and they'll bring money, but a crowd will bring your advocates and a crowd will bring your customers.